Wall Street. Top investors watching your money this morning. Joining me right now is Bell Point Asset Management Chief Strategist David Nelson, Fitz-Gerald Group Principal Keith Fitz-Gerald, and TJM Institutional Services Director James Urio. Great to see you, gentlemen, this morning. Thank you so much for being here. David, futures are trading higher this morning, looking to add to the rebound after Monday's sell-off. You say the markets are at peak growth right now. Tell me about the volatility we're seeing and what's behind all of this nervousness.
I think take a cue from the bond market. It's been a great leading indicator as to what's going to work and what's not going to work. Over the last several months, you saw yields crater actually go below 1.2%, and hence that pointed to long duration equity, large cap secular growth. FANG is not the risk on trade. That was largely a defensive move. With yields up on the 10-year, I'm looking right now up a little bit. We should get some continuation. With what we saw yesterday. Like you said, we're at peak growth, 60% for this quarter, 35% on the year. Right now, estimates for next year are 10 to 11% earnings growth and a 4% GDP. If that holds, then we're okay. But if we start to drift down to, say, mid-single digits or maybe even a 2% economy, then there's more pain ahead. We're going to have to get some of this back.
So you're saying that we're at peak growth, meaning that growth slows down in 2022. I mean, that is partly what's behind this nervousness with markets, right?
I think growth has to slow down. You can't sustain 60% growth or even 30% growth. We're not that kind of economy. The question is, what are we slowing down to? The bond market has been saying something more ominous out there and maybe less friendly to what we're seeing in the market. The reflation trade largely unwound. Small caps went from top performer to the last. Utilities became the leading sector for this month. That's the concern. So we're going to have to wrestle with this. We're in the middle of an earnings season right now. The biggest risks right now are, of course, COVID, the Delta variant, and China in that order.
Yeah, for sure. Keith, we are in the middle of earnings season. This morning, we've got Verizon and Coca-Cola out. Both are better than expected, and both management teams are raising their guidance. Right in the middle of these worries about growth slowing down. Last night, of course, we saw Netflix falling short on subscriber growth. They added 1.5 million new subscribers in the second quarter, the smallest jump in new subscribers since at least 2013. What are you expecting from the rest of earnings season, and what are your thoughts on what you're hearing this morning? We've got Verizon and Coca-Cola trading up this morning on these numbers.
Well, personally, I love the fact that Verizon and Coca-Cola have done what they've done because it points out a bifurcation in the economy. You've got to be very, very careful. Stocks are not the economy. Economies are not stocks. So if you stick with the right stocks, odds are you're going to do just fine. It's going to be rocky. It's going to be volatile because of all the fears of COVID, China, what the Fed's going to do next. But that's part of the parcel at this point in the game. So Netflix, to me, was a big one, though, because, subscriber growth slowing down like that. Yeah, I'm not so keen to own the company in here. I think better choices, the smartest stocks you can buy are going to be Apple and Microsoft, for example, period.
Okay. All right. Well, you really have to be selective then in terms of where the growth is in this earnings season, as is usually the case. Then there's crypto, James. Bitcoin back above $30,000 this morning. Your reaction there? Are we seeing the volatility go back and forth from stocks to crypto? Bitcoin now at 31,387.
Well, the volatility's been in crypto for a long time, and there's a couple things I'm impressed with about this move. Crypto's had to deal with quite a bit of stuff. They had to deal with a massively, over-the-top positioning and regulations, which regulations were always going to come. Frankly, I was surprised that they haven't come years ago. But just now, EU reported proposed reporting regulations, Turkey regulated. So I thought that there was going to be this big move. 30,000 was the big psychological level. It's back above it. If it goes back above 32.50 and it's bid there, I will think this move is over. One of the shot in the arms that it got was Kathy Wood came back in and bought a bunch more crypto. So the religion of these holders is just amazing to me. I work with some of these crypto people, and they're crazy. We haven't got to this point yet where they've changed their mind, and that's pretty impressive to me. So I like Bitcoin here.
Well, they're looking at the future in terms of the digital currency and the digital world. Isn't that right? I mean, we don't know if it's going to be Bitcoin or if it's going to be something else, but we know that increasingly we are using the digital economy to transact.
There's no doubt. And it's about institutional adoption, too. Just over the last couple of years, we see these big, old, blue blood American companies announcing they're moving into cryptocurrency. And is Bitcoin the one? Well, no. You know, I mean, I don't know for sure if Bitcoin's the one. It certainly has the advantage of being the first one in the spot. Ethereum's there, too. I have Bitcoin, Ethereum, and Litecoin. And I'm not sure that those are going to be the right ones, but I know they were the fastest ones out of the gate, which gives them an advantage. Also, the fact that the CME has launched Bitcoin futures, Ethereum futures, gives some validity to that as well.
Yep.
So this is a dollar hedge still, too, by the way, in my opinion.
All right. It's a great point. Thank you so much. Gentlemen, great to see you all. Thank you, David Nelson, Keith Fitz-Gerald, and James Urio joining us this morning for the Word on Wall Street. Quick break and then much more ahead this morning right here.